Well, hello there, Arcview. I am so excited to be coming at you live in your living rooms all around the country and maybe even the world. I'm Cody Sanchez of Entourage Effect Capital and the private cannabis company, investment company in the space. And I'm thrilled to be here talking with you all about the industry that we call the next generational wealth creation event. We're the largest group of ultra high net worth and high net worth investors in cannabis. We are here at Arcview. And our goal is to bring you everything you need to invest in this industry and partake in the newest emerging market strategically and with eyes wide open. You know, this industry demands a lot of respect before putting your dollars to work, and we give you the intel to do just that. You know, I was sort of obsessing about something this week, and I just put a video up on LinkedIn about it. And I was obsessing about something that I think is the biggest fallacy I see in investing today. And let me tell you what it is. The fallacy is that now is a terrible time to be an investor, and maybe especially an angel investor. That because the world is volatile and full of hiccups and obstacles, that we should sit on the sidelines and wait. And I think that is a huge falsity. And let me tell you why. I actually think it's the best time to be a private sector investor and to be on calls like this. Why? Because the 2008 crisis was a housing crisis, right? If you could go back to 2008, 2009, 2010 and do one thing as an investor, what would you do? You'd buy real estate, right? You'd buy a couple houses. Now, what is the one thing I think you will wish you had done in 2020, 2021, and 2022? Invest in and buy businesses, particularly small businesses in fast-growing segments of the economy that have a real revenue like cannabis. And you know, we're biased because we have hundreds of millions of dollars at play in cannabis, but I actually want to talk to you about a few little nuggets that you might not see in the news every single day. So let me share my screen really quick with you. And I want to show you a little nugget. We call this microdata. This microdata comes from my old firm where I was an economist as well. And what you can see here, we call these green shoots. Shoots in the economy showing some sprouting and growth. If you were to look at this data 2 weeks ago, every single metric would have been bright red. Now what you are seeing are some segments of the economy are starting to move around a little bit. We see movie tickets are up, TSA checkpoints are up. So the economy seems to be rebounding a little bit. Here's the problem. The market overall, as you all probably have seen in your day-to-day, from a public markets perspective, isn't down nearly enough to what we think it should be down for what's happening with millions of jobs lost, right? And so the next trend I think we're going to start seeing is that many companies that are not in industries like cannabis, where they actually are allowed to be an essential service, continue to grow and have, in some cases, double to triple digit growth due to being deemed an essential service, they are going to struggle from some massive bankruptcy issues. And let me show you why. If you look at this graph today, what you're looking at here, the blue line is unemployment. We are all very familiar with the millions of people that are now employed across the country. Well, look what the correlation is between the unemployment rate and bankruptcy filings. Goes in concert, doesn't it? We haven't yet seen the bankruptcy increase across all industries like we have unemployment, because just like real estate, it lags. So if I'm an investor out there today, I might be saying public market seems expensive. I know I want to invest in businesses because this is a small business crisis, but I need to do it in a way where I can actually invest in businesses that are growing, that have real revenue in this space. And that's what we're here to talk about today, because Arcview is one of the very first investors in cannabis overall, as you all know. We've put almost $200 million to work. The beautiful part about being an investor today is most angel investors, quite honestly, they do it totally wrong. They come in hard during bull runs. That's when entrepreneurs tell you things like, my company's worth $1 billion. What about my profits? Oh, we don't have any yet. I've gotten that pitch actually twice, seriously. Newbie investors then come in and they spread dollars like nothing can go wrong. But the truth is, those are some of the worst times to put money to work. It's just the law of buying at highs. The real money is made when things are tough and when your gut is telling you to put all your money in Bitcoin. I mean, has anybody looked at Bitcoin lately? It's at all-time highs. And the Fed is printing money like, well, it's Venezuela. So that's the world we live in today. And we're at the verge of, in my opinion, a global cannabis reset. The fascinating part about that is this last graph, which I'll show you. This graph here shows you something else. This is $4.7 trillion sitting on the sidelines. Institutional investors, investors like you and I, mom and pop investors, have more cash on hand than was on hand at 2008 by a multiple of 3. So essentially, we're going to see a window in which there's pain with bankruptcies, with the public markets finally catching up with what's going on privately. And we're going to see a period in which that money doesn't come in yet. And that's our opportunity as angel investors. And what I think is fascinating is we're not the only ones that think this. One of the most prolific angel investors out there, at least the one that's most public, is Jason Calacanis. And Jason Calacanis, essentially, he talks about the fact that, oh, let me stop my share so you can't see all my notes and learn all my secrets first. He talks about the fact that this year we are going back to valuations like we saw in 2008 and 2010. And that he is going to be more active in the next 12 months than he's ever been in his 10-year history as an angel. I think all of you listening should think about that a little bit. How can we buy at all-time lows and invest in a market that is at all-time highs sales-wise? So I take my hats off to those of you who actually listen to a call like this, who step forward when so many will sit on the sidelines, paralyzed instead of poised for this opportunity. So without further ado, let's get you educated today so you can go and put some smart investment dollars to work in this new emerging market. I want to make some introductions. We got an illustrious panel here today, and I'm going to start with my friend Deborah. And Deborah is the co-founder and CEO of the Cannabis Financial News website, Green Market Report. If you guys haven't followed Green Market Report, you should. It's phenomenal. And she began her career in the securities industry as vice president at Bear Stearns, holding all the securities licenses there, earned her master's degree in business and economic reporting from NYU, is also a co-founder of the Women's Cannabis Executives Networking Group called Industry Power Women, and serves on the board of Cannabis Newswire, Access Wire. She is going to be our moderator today. Then you have another friend of mine, Jamie Pearson, who's the president and CEO of Bang Inc., a second-gen cannabis executive. So this isn't her first rodeo, with decades of experience in global ops, deal structuring, and negotiation as a former real estate investor and executive. Fun fact, Jamie's fluent in German and English. Maybe, Jamie, you can give us a little bit of insight in German, too. She's responsible for global operational and distribution rollout across market sectors and oversees the company's day-to-day management and strategic initiatives. She has been named 2 years in a row, one of the most influential women in cannabis. Her expertise, experience, and deep industry relationships elevate Bang in the industry on multiple levels. I can absolutely attest to that. Then we've got Chris Crane. He's the founder of Forefront Advisors, and he founded that in 2011 as a consulting firm, now serves as the president of the multi-state cannabis cultivator and retailer Forefront Ventures. You might have heard of them. Prior to forming Forefront, Chris served as Director of Client Services for Canby, who developed best practices within the medical cannabis industry. And Chris dedicated his career to reforming the nation's drug policies, familiar to those of us here at Arcview, and was the Associate Director of Normal from 2000 to 2005, and an ED for Students for Sensible Drug Policy as well from 2006 to 2009. I've said it before and I'll say it again, we can't bring you guys this kind of sponsorship without incredible sponsors like the one we have today. So thank you to Hemp Staff. We have James Yagalo. James, I love you. Your last name, I hope I said it right. Last time I messed up the sponsor, so we'll try to not do that again. He's the CEO of Hemp Staff Recruiting, where he doesn't mess up your recruiting like I might pronunciation. He's been serving clients since 2014, and they're certainly an industry leader in hemp and cannabis recruiting, as well as cannabis training. For more, go on over to hempstaff.com or email James at info@hempstaff. And they're running a cool special 6th anniversary offer just for Arcview individuals. So mention this webinar, say Arcview, and you'll get $600 off your first placement. Last, certainly not least, we've got Tom Adams, Managing Director and Principal Analyst at BDS Analytics, discussing some of the numbers and statistics behind the topics today and giving us insight into the newest Arcview and BDSA joint report, The State of the Legal Cannabis Markets 8th edition. I know this is one of my favorites and I look at it frequently. So without further ado, let me get you over to Deborah.
There we go. Thank you, Cody. Thanks for having me on. As we all know, the pandemic has really affected all of us. And I think for the cannabis industry, one of the biggest changes has been the event space. I mean, we're not meeting anymore in person. And that's something that I know all of us, as much as we may have complained about a heavy calendar of events, we now miss each other and miss these events where we could run into each other in the hallways and chat and visit. Certainly for cannabis media, it's been difficult. Look, it's been difficult for journalism and mainstream media in general, much less just cannabis. But having said that, right now, the demand to read content is at an all-time high. Unfortunately, most media uses events as a way for revenue now. Because Google and Facebook have kind of taken away all the online advertising money. And by losing these events, we've really lost a chance to get most of our revenue. That bumps us over to advertising. But of course, cannabis companies have slashed their marketing and ad budgets. So it's really become a difficult time for cannabis media. I know for Green Market Report, kind of like what Cody said, we look at this moment and think, well, what can we do right now that we will look back on and say, wow, now that I'm not so focused on doing events, what should I use my time for? And we too will start doing webinars. We are going to be launching a new website. We just signed on with Quote Media, so you'll see more of our stories coming up into quote feeds, ticker-driven news feeds. So we are not slowing down. Luckily for us, we also had a cushion that we could give ourselves a nice runway. Unlike some of the cannabis media that just spent all the money that they raised, we ran a lean ship. And because of that, because we were lean and tight, we are now in a good position to ride out this pandemic. I know that it certainly affected the multi-state operators as well. Definitely in Massachusetts, where it was like, okay, you can sell adult use. Oh, no, now you can't. I mean, the best part about the pandemic, and of course, I don't mean that in a positive way, best part, but one thing that did happen was that cannabis was deemed an essential service. And was a huge game changer. Granted, technically, cannabis companies aren't supposed to get PPP loan money. We know that many are getting those loans. It'll be a question as whether they're going to have to pay that money back or whether anything is going to happen with that. But there certainly was a lot of controversy over whether cannabis companies could get these loans while being deemed essential, while paying taxes. I know that was a big discussion that was happening online. Now that we're hearing that some of the cannabis companies are actually getting these PPP loans, it'll be interesting to see how that falls out. But Chris, clearly you're at the forefront, no pun intended, on the MSO beat. Tell us what's going on with you. I know that, deliveries and curbside service was the end all be all, but I'm hearing that, actually deliveries are already starting to kind of come back and people are already starting to go back in the stores where they can.
Yeah, it's really been it's been very different from state to state, and that's largely due to the the differences in regulations from state to state. So there are some places, Michigan, for example, where we've seen a big uptick in delivery, but that's largely driven by the fact that customers are not allowed in the stores anymore, so it's only curbside and delivery. We work with Home of Medicine, which is located right in downtown Ann Arbor, and so you don't have a big parking lot. It's not really a convenient location for curbside pickup. It's right on Main Street in downtown Ann Arbor. So we've seen a major uptick in delivery there. But in Chicago, for example, where we've been deemed essential and customers have been allowed to come into the dispensary the entire time, we've been doing most of our sales through the store. And in fact, while we've seen in Illinois, while we've seen a little bit of a decrease in the number of transactions per day, and that is due almost exclusively to social distancing requirements. We can't have as many people in the stores. So we generally have folks make appointments in advance. They'll give us an appointment within an hour window. When they get to that hour window, they'll then get called by somebody on our team to take their order so that they're just coming in, paying, picking up, and leaving. But this is a state that had major product shortages going into the health crisis. That's actually gotten a little bit better. Production's ramped up a little bit even during this time period. But also some of the stores have chosen to shut down for adult use. And so while we've seen a slight downtick in the number of transactions per day, we've actually seen our overall sales numbers go up at that location because people are buying more product. They're coming a little less frequently, but they're buying more while they're there. And we've loosened our purchase restrictions that we had in place prior to this to try and maintain inventory, recognizing that we'd be seeing fewer people per day. So sales are actually up a little bit, even though total transactions are down. So it really has been variable from market to market, right? In Maryland, we've seen similar differences. Stores that have parking lots tend to do better with curbside than stores that are in more urban foot traffic type areas, which tend to see more people coming in when that's still available to them.
Have you seen any fallout from products coming from overseas? I know at the beginning of the early stages of the pandemic, when China was shut down, a lot of vape pens come from there. A lot of the packaging products come from there. Have you seen any residual fallout from that and issues there?
So you're right. That was more of an issue in the early days when this was still a bigger issue in China. There definitely were issues getting, particularly vape hardware, the actual cartridges, the hardware itself, the batteries. There was a delay in those shipments. We didn't know when products were coming in from China, so we did see a dip in sales. And remember, that also kind of followed right on the heels of the so-called vape crisis. Which we now know was driven almost exclusively by the illicit market, but definitely had a downward impact on vape sales even within the legal market. So you coupled that coming, and then right after that with a difficulty of getting products in from China, that impacted the vape part of the market. Outside of that, we haven't seen a huge impact, and it doesn't seem to be. At least from our experience, it doesn't seem to have much of an impact now that products are coming in much more freely from overseas, particularly from China.
One of the other big things that happened just last week, other than cannabis being deemed essential, when the second relief package of legislation went out, there was a lot in there with regards to cannabis. Do you think that we're going to see anything come from that? It kind of seemed like it was one of those kitchen sink legislations where they threw in everything but the kitchen sink.
Kind of how bills are done these days, yeah.
Certainly, esteemed Mitch McConnell had something to say about that. What do you think? Do you think that some of that stuff's going to get yanked out, or that this might be a moment where these things get pushed through?
So I'm cautiously optimistic. That said, I think chances are probably better than not that the cannabis banking language does not wind up becoming law in the end. But there is a real chance. The fact that it's in the House bill, it did pass, is a really big deal. It's, I think, highly unlikely that it will be in the Senate version of the bill, assuming that the Senate does a bill. Right now, they don't seem to be in any hurry to pass their own relief package. And I think it's very unlikely that this will be in the Senate version of the bill, if there is one, which means it probably comes down to some sort of reconciliation conference committee. And it's really hard to say at this point how a conference committee is going to go. We don't know who the conferees are going to be. That would be a huge factor in this. We don't know how much the Democrats are going to push for this. If past is precedent, Democrats typically have been willing to give up on cannabis issues in exchange for things that they care a little bit more about. And so, conference committees are entirely about horse trading. And so Democrats would have to think this is an issue they really care about and hold firm on it and be willing to give up something else. So, I'd say, slightly worse than 50-50 chance, but those odds, given that Congress has never passed a meaningful piece of cannabis reform legislation ever, outside of the Rohrabacher Amendment, which only applies to medical businesses, those odds are pretty good. And so there is a possibility. And even McConnell coming out last week and kind of ridiculing this, there was a little bit of sort of hidden optimism in his statement. What he ridiculed was the fact that the language in the House bill called for studies of diversity within the cannabis industry. And that, of course, was language that was taken directly out of the Safe Banking Act. This was literally just the Safe Banking Act in the House relief package. But he didn't actually say anything about or mock the actual banking language. It was just these studies on diversity in the industry, which is part of a much broader piece of language. So the fact that he didn't actually bash the banking language itself may actually be a positive. And look, I think some of this is going to rest on how much does Mitch McConnell think this is important to Cory Gardner's reelection? How much does Cory Gardner need to be able to go back to his constituents in Colorado and say, I got marijuana banking passed? If they think that that's an important piece of his reelection campaign, then that greatly improves our chances of this getting passed in the end. So I'm cautiously optimistic, even if past this precedent's hard to hold out a whole lot of hope that Congress is going to do the right thing when it comes to cannabis.
I am too. I honestly, though, I guess my point of view on the legislation is more from the nuts and bolts of it, in the fact that I think that as the state legislatures and really the federal government has to start to deal with the fallout of these rescue packages of, at a certain point, we have bills to pay, in the sense of we've sent out these $1,200 stimulus checks. We've thrown out these $600 a week unemployment checks. We've given, the PPP program that I mentioned before, the grants. A lot of money is being spent to keep the country going. At a certain point, those bills have to be paid. And my theory is that the state or even the federal government will look at cannabis and go, oh, well, there's a fast way to get some tax money, and might, push it through. We'll see. That's a bit of a stretch on that, but that's my thesis. Another thing that has happened with cannabis during this whole pandemic is the FDA came down on CBD companies that were claiming that they could cure COVID or treat COVID or something like that. And they came down hard, as they should. You can't make medical claims if you have nothing to support that. But having said that, there have been some studies and there has been some movement on the cannabis side with regards to research in health and inflammation and things of that nature. And Jamie, I think that, with your involvement on health and wellness, where are you seeing cannabis fit into this scenario?
Hi, Deborah. Thank you for having me. And I just wanted to say thank you before I jump into answering your question. Chris, I've been following you for a long time, and I'm a huge fan of Cody. So I just want to say thank you to Arcview for having me first and foremost. And, going to your question about research, I think the research that you're talking about was the University of Lethbridge in Alberta, Canada, came out with a study in April that was talking about how CBD is blocking those cells that allow COVID into the body. It was published, it was not peer reviewed, it was not the type of research that, the FDA's, because it's Canadian, first of all, but it's the type of research we don't allow going on here. And that's one of the advantages that the Canadians have with, having a federally legal cannabis program, is they can, give their researchers money and get some Canadian research going. And we see research happening in Israel, all these places all over the world where research is encouraged on cannabinoids. And I think that's one of the things that we're talking about in the cannabis industry at some of the higher levels, like Chris is talking about with, trying to get the Safe Banking Act passed and trying to get research passed, is I think COVID is offering us yet another opportunity to show the world, to show politicians, to show Americans, that this has been deemed essential, that people are using cannabis to treat different things. Right now, our medical system's broken. Nobody argues that. So we know that we need some fixes. And I think we all know that we're using, as Americans, we're headed back to home remedies, and people are trying to, instead of using Ambien, they're trying to give their kids baths in lavender, or whatever the case might be, where we have to decide and choose between going to the doctor versus, not going to the doctor. And I think a lot of times, cannabis is one of those things that people are seeing as a plant-based treatment. And I think Americans want and really envisioned going to not a dispensary, but to the pharmacy to go get their cannabis. I think when cannabis laws were passed initially, that's what people visualized. I think since then, an industry has erupted, and it's here. You can't put the genie back in the bottle. So I think it's time for us to start, getting together with the politicians and getting more mobilized and making sure that you help them see where the money is. Because ultimately, when you follow the money, that's what moves mountains. And, right now what's happening is you've got big business, big alcohol, big pharma, big insurance. You've got people that are really worried about cannabis having an impact on their dollars. And we know that Washington's controlled by lobbyists. We know that the lobbyists are powerful and have lots of money. So until we see the legislators have it affect their reelection campaigns and their pocketbooks, that's when we're going to start seeing things move. And I think this was a big opportunity for that, because this industry, I agree with you, Deborah. I think this is, if you look at history and you look at the end of alcohol prohibition, it was a money grab because we were getting out of the Great Depression and we're headed back, we're saying there's a depression. And going to Cody's points, she said the 2008 crisis was a real estate crisis, and I'm a real estate investor, so that's the industry I came out of. And she says, bankruptcy lags behind unemployment, but foreclosure does as well. So what I expect to have happen is there's going to be an explosion of foreclosures. I'm predicting it'll start in about November or December. I'm sitting on cash right now. I'm going to be buying real estate. I'm going to be buying small businesses. And as the CEO of Bang, I'm going to be looking for opportunities to do some consolidation. And so, I know that you asked me a research question, and it all sort of interrelates, all of these things. So what I'm hoping to see from an industry standpoint, from the CEO of an edibles company specifically, one of the things I would like to see personally is more research and advancement into the area of edibles, where we can get some of that effect, where somebody wants to take a 10 milligram dose of chocolate and know exactly what's going to happen. I'd like to see us get there. And until we get federal research and federal legalization, we're just going to continue doing what we've always done as human beings and figured it out the hard way.
Well, it certainly seems like the edible sales did increase certainly at the beginning of the pandemic, when people were concerned about the respiratory nature of COVID, people having trouble breathing. And so, I saw on the sales data, and it was probably BDSA's sales data, that said, edible sales had started to go up because of this. And when you bring up bankruptcy, well, we just saw Green Growth Brands filed for bankruptcy today. This is a kind of an interesting thing. A lot of the companies have been reporting their earnings in the last couple of weeks, and many of them have actually had pretty decent first quarters, and that did include some pandemic time, which was mostly March. And the quarters for several of these companies were actually pretty darn good. Cannabis does seem like it's been able to get through this pandemic way better than a lot of other industries. But are you concerned that we're going to start to see cannabis companies blame COVID for maybe any of their bad behavior and try to sweep some of their poor decisions from 2019 under the COVID rug?
Well, a couple things. Obviously, if you've got an expedient excuse, I think you're going to see people using that. Why wouldn't they? Obviously. But I do think COVID is going to impact cannabis companies. It depends on where in the seed to sale cycle you exist. You know, the vertically integrated companies they're going to get hit in all kinds of different ways. Like from banks' perspective, I'm seeing people get hit in ways such as social distancing makes growing very difficult. If you have to have people 6 feet apart, and you can't just have people trimming, and you can't have, a factory, for example, our chocolate factory, where we would have people packaging chocolates. Obviously, they were using food safe methods, but when you have to stand 6 feet apart, I can't package as much chocolate as I was before. So yes, there are going to be COVID impacts. And then the other part of it is, I think cannabis in general is a very difficult industry to function in, and always has been. So things take longer, they cost more. We don't have regular things. I say this all the time. We don't have banking where I might have a bank account, but a lot of the people I do business with don't. So I've got to manage cash that comes in, and just things that we shouldn't have to deal with. Or you mentioned, Google won't let us buy AdWords, so just basic things of running a business. Everything in cannabis is difficult. So you do have a lot of companies really living and mirroring, I think, the American population, which is you are basically functioning paycheck to paycheck. And a lot of Americans, they say something like 75% of Americans are one disaster away from bankruptcy. So that's what happened. And you're going to see that play out. And I think cannabis companies often operate one disaster away from bankruptcy, because they were, reliant on investor money, or reliant on, everything all the dominoes falling in place. And, when you have something like COVID hit, yes, I think there's going to be some impact for sure. And you're going to see some fallout. But I think that downward trend started at the end of Q4 2019, where you saw capital dry up in cannabis. So you had downward pressure anyway, and then COVID hit. And so while we were deemed essential, and I have to say I'm grateful to be in the cannabis industry, a lot of people know my story, but my dad's been a cultivator for 55 years. I grew up in the industry. He always said, have your bullets, your alcohol, your guns, and your cannabis ready in times of trouble. And so, I grew up knowing that that's what it takes. And here we are in the middle of a crisis. And I like to tease my kids' dad. I call him the zombie apocalypse doomsday prepper. He's over there trying to have, beans and rice and gas and water. And some people think that if it hits again in the fall, we're in big trouble. I'm grateful to be in cannabis. We're going to be okay. Some of us, but I think some of us aren't.
Well, I think that's a really great point. And as Cody mentioned, I come from the world of Wall Street, and, on the trading floor, when things were bad, it was actually seen, there was always this converse logic of things were bad. That was a buying opportunity. Right. You bought when other people were selling, you held your nose and you jumped in. And I feel like we're kind of hitting that point right now. We've got a lot of cannabis companies that, to your point, were priced for perfection. And when maybe Massachusetts was a slow rollout, oh gosh, that screwed up all their business strategies. When Canada 2.0 was a slow rollout, well, that screwed up a lot of people's quarters as well. And so we are now seeing some of these companies, and like a Green Growth Brands, who got into way too much debt, no longer has the money to service that debt. They're not the only ones. We're seeing this happen, and now they're starting to sell off assets. So that's starting to create some great opportunities for companies that sat on the sidelines maybe and just built up some cash, and boy, they can go out and buy some properties at really great prices. As you were saying, you were talking about real estate. Chris, I'm sure that you guys are seeing a lot of opportunities come across your plate at some pretty nice prices.
Yeah, to be honest, it's not a big focus of ours right now.
Okay.
Acquisitions and expansion. I agree. If you have a massive balance sheet and you have the ability to go out and acquire assets, now is probably a good time to do it. For us, we are really focused on the business fundamentals. We think that, we don't know how long this economic downturn is going to last, but we're certainly operating under the assumption that it's going to be a while. Right? We may be sliding into, the worst recession since the Great Depression. I know we said that in '08, but we've never seen unemployment numbers like this. And so we are really focused in putting ourselves in a position where we don't have to rely on investor capital. Where we are doing everything we can to get ourselves to cash flow positive and to profitability by the third quarter of this year. It's possible slips into Q4, but we're really focused on Q3 right now. And want to get ourselves to a position where we don't need investor capital to grow. So that has meant, shedding some non-core assets, bringing in some revenue that way, and focusing attention on the states where we're driving the most revenue, where we're vertically integrated, where there's adult use or a clear line of sight to conversion to adult use. And really focusing on the operations fundamentals, in particular, low cost production at scale. And we think that, once we get to the point of profitability this year, they always say when you don't need money, that's when everyone wants to give you money. And we're already starting to see that, right? I mean, when we announced recently that we are well on the way to profitability by the third quarter, we had people coming out of the woodworks looking to give us money. And right now we're actually saying, hold off. We think the smartest thing to do right now, while it is tempting to go out and raise money so that we can buy more, we think the smartest thing to do to prepare for what may be a very long slog in a downturned economy is to be able to be self-sufficient and self-reliant. And if we can get there, I don't think those rock bottom prices are going anywhere anytime soon. I think they're still going to be there by the end of this year and probably early next year. Once we can show that we're profitable with the asset base that we have, then I think we can really turn our attention to expansion, potential acquisitions, and using, by and large, our own capital to do that, rather than having to go out and try and raise money in a really tough economy.
That does seem to be the theme of the day from a lot of companies is, last year it was all about expansion and planting your flag in as many states as possible. And this year it's taking a real hard look at each of those properties that are within your portfolio and, making some tough choices of, well, we may have really liked this property or this state, but to your point, if it's not really contributing and it's just costing you a heck of a lot of money, then sometimes it's best to just let it go. Janie, is that something that, if you guys were looking at products or properties, are you looking at people that are only, positive cash flow or profitable?
I took over as CEO on December 4th, and everything Chris said is spot on. I came out of, like I said, the real estate world, and I've never run a business before that's been publicly traded. So I inherited Bang and really had to look at, how do I reconcile the way I would run a business with the way Bang is currently being run with my know-how. And my know-how is right people in right places, self-sustaining. I've never got money from somebody else to run my business. So I'm looking at, if there were no money to go get, how do we stay alive? Exactly what Chris is saying. You've got to be self-sustaining. So how did we get there? We got there by looking at, what is our core competency? What is Bang great at? We're great at THC chocolate. We make, obviously I'm Bang, so I say this, but I say this honestly. We make the best cannabis chocolate on the planet. And that's because our founder was a chocolatier. And a little bit about our story, for those of the people out in the audience that don't know who Bang is, we're 10 years old. We started with a flagship chocolate bar. Our founder was, a master chocolatier. We were making chocolate that tasted like chocolate and not like cannabis back when you couldn't get oil from, CO2 extraction or from distillate. So, going back to your question, yes, I agree. Now I went back through and rationalized. We had 150 SKUs. We were in CBD brokerage. We were trying to be all things to all people. I said, no, what we're going to do is what we're really, really good at. What's our core competency? We're going to focus on that. We're in 7 states right now. And the 7 states that we're in, we've got great partners. And we're excited for COVID to lift, but we're also in Canada, and Bang's doing great. So I'm in the really, really fortunate position of sitting on a company that has the right people in the right places. We don't need capital from other places right now. So I'm just really feeling fortunate to be in the cannabis industry, sitting in the chair I'm sitting in, and just feel like the most important thing that we can do, just like Chris said, is focus on being profitable and self-sustaining and not needing something from somebody else.
I would agree with you. That chocolate is pretty darn good. Do you guys think that there's going to be any kind of permanent changes at this point from COVID? Do you think that we're not going to be able to do this consumption lounge idea that we, seemed like it was going to be really cool coming up, or that we're going to keep the curbside delivery? Do you think any of these things are going to have a permanent effect on cannabis?
I think curbside delivery is probably going to go away. And Chris was talking about the fact that, not every piece of real estate that has a dispensary on it's designed for that. But I do think that people's behavior has changed in this crisis, and they've learned, for example, they've learned how to use Instacart and they love it. And they've learned how to, hit on their phone and get the cannabis delivered to their door. I think some of those things aren't going to change just because they maybe took the time to figure that out. But more importantly, I think when you go into a dispensary and you picked up a jar and you smelled it and all of this sort of hand holding, touching, I think all of us are thinking, I'm not going to, if 42 people touched that before me, I'm not touching that. So I think some of that behavior might change. Now I say that, and I'm sitting in Montana, and I have to tell the crowd from, this is my perspective. We've been open as a state for 2 weeks. Now, we were shut down when the Bay Area shut down. So we've been shut down since March 10th. I think our governor did a great job in doing that. But we just reopened we've been open 2 weeks. So here's my perspective of what it's like to be open for 2 weeks. The first week, everybody was treating each other like, oh my God, you might cough on me and give me this virus. 2 weeks later, I was driving by our Target on Saturday, and literally cars were all the way to the, every single spot was full. And it was like everybody was back with a vengeance, shopping, restauranting, everything's they're back. It took 2 weeks. We're back to normal. And almost like to your consumption loan question, we had it taken away from us. So we're going to do it 10 times more. So it was weird to see. I expected everybody's behavior to change for a long time. I don't think so. I think people are like, I wasn't allowed to be in a consumption lounge. Now I'm going to go cough all over everybody. And I don't know. We'll see. It'll be interesting to see how it plays out. But I think humans are designed. We're pack animals. We want to be, amongst each other. And I think that's going to be up to the government to some degree.
Well, it looks like we have a lot of great questions lined up, and I think that Louis is going to be posing those questions to us.
Yeah, absolutely. Thank you so much, Deborah. Jamie, Chris, Deborah, it's been great to hear our insights. Hello, everyone. For those of you who don't know me, my name is Louis Hahn. I'm the VP of Member Experience here at the Arcview Group, and I'll be moderating some audience Q&A today. Unfortunately, I won't be able to get to everyone. There's 358 of you on this call, but I'll try to do my best to get some of the most topical ones. But this first question is for everyone on the panel, Deborah, Chris, and Jamie, and that's about COVID-19 resources. Renee Grossman has posed this question. She's been told by every local and state resource that they are not permitted any PPP loans or any other disaster relief. Can you share with us, because you guys operate all along the spectrum, whether you're plant touching or ancillary, can you share with us how others might be accessing these resources? Deborah, let's start with you.
Well, from what I read, from the language that I read, no, cannabis companies are not supposed to get this money. Technically, listen, cannabis is still federally illegal. And if you look at the PPP questionnaire, there are specific questions in that say, do you get any money from any companies doing illegal activity? And it asks these are several questions about, illegal activity. Cannabis is still federally illegal. That is my interpretation of it. Now, I know some of the other companies don't agree with that interpretation. I think it's pretty cut and dry. And some of the companies that are insisting that they should get this money are also now suggesting that, well, they're never going to ever really go back and look at the companies that got these loans and ask for the money back. So they've pretty much written off the money. To me, I would think that's a fairly big risk to take if I took several $1,000s and then spent it, and then the government comes and wants to claw it back, which is very possible, and then you don't have the money to give them back to them because you spent it. I think it's a really risky thing to do. I've heard that there's as many as 50 cannabis companies that have gotten these loans, and that we're going to hear this information get dribbled out over the next couple of weeks. I think to me, I think it's a pretty big risk to take it.
Okay, Jamie, what's your experience been?
Well, and I think the general population of cannabis people don't tend to have the risk-averse nature that maybe a Wall Street person might. So you do live in the gray area when you're in this industry. And I think also when you are talking about like attorneys, for example, if an attorney has a cannabis company as a client, that's one cannabis company, and the attorney has 99 non-cannabis companies as a client, you also have to ask yourself, if that attorney takes, 1 cent for every $1 from a cannabis company, are they excluded because they receive money from a company that's basically under the rules? If they're in a state that's operating legally, they're not breaking federal law. So there is a gray area there.
Interesting. And Chris, what's your take?
I tend to agree with Deborah on this. I think it's risky. These companies are in violation of federal law. I think every one of us are. And while that does make us a little less risk averse, we are still in violation of the Controlled Substances Act. They do ask these questions. I think it's much more challenging when it comes to the non-plant touch businesses. Massroots, for example, was reported did receive a PPP loan. They claim that 95% of their revenue came from investors, only 5% came from ad revenue, although essentially that ad revenue likely all came from plant touching businesses.
Right.
So if 75% of the 5% they received came from plant touching businesses, right, is that enough to disqualify them? Well, in this case, it didn't. The question though is it because they actually do qualify, or is it because the bank that they applied to? Remember, this money is not coming directly from the federal government. This money is coming from the banks. The banks get the money from the feds. You apply through your bank, and it's possible the banks were overloaded with applications, right? Most of these banks receive hundreds, if not thousands, of applications in a 2 to 3 day window. Maybe they just overlooked this stuff and they were able to slide through, or maybe they qualify. There's just so many open questions here, but I do think it is quite risky for a direct to plant business to go for one of these loans. Given the volume of how many loans there have been granted here, the chances that the federal government will look into this through the banks and figure it out, it's probably relatively small, but I think large enough that it would probably be a pretty big risk if you're a plant touching business to actually try and get one of these loans and to spend that money.
Well, that's what I'm saying with the attorney example. Is the attorney example does say he or she would be excluded from getting that money because they do get money from plant touching businesses. Right. But at the same time, is their business, if their business is non-plant touching and they're applying through their banker sees an application from an attorney. And so the question really boils down to, I think we're talking about plant touching versus ancillary businesses and the definition of who you are, how you operate, where your dollars come from. And I think every one of us in the industry, whether we're plant touching or not plant touching, we're all breaking federal law. Even that attorney is breaking federal law. But the reality is they're also not breaking federal law because federal law has allowed you to operate in a state where cannabis laws have been passed. And that just highlights the need for legislators to clear some of this up. It's time.
The federal government has no hesitation in taking cannabis tax dollars through 280E. So are they themselves illegal? I don't know. Good question.
Well, but they take tax
that.
dollars on any any income. Doesn't matter how legit it is.
No, I was just kidding about that. But thank you so much for your insights, everybody. That was great to hear your insights about what a post-COVID cannabis industry would look like. Now, everyone in the audience, before you go, we do have a quick word from our sponsor at HempStaff and also some very interesting insights from BDS Analytics as well. So I'd like to hand things off to Jake Kuzaruk, our VP of Business Development, for Jake's Sponsor Corner. Jake, take it away for us.
All right. James, thanks for joining us today. And without further ado, let's break into some questions that I know are top of mind for us all. So if you could, please give us a little bit of a brief overview on HempStaff and why you stand out amongst other recruitment firms.
Sure. We've been around for 6 years, which is quite a lengthy time in the cannabis industry, as everyone knows. We actually were ahead of our time when we started, and we wanted to be in every cannabis market, and we didn't want the overhead of having a building in every cannabis market. So we hired work from home cannabis knowledgeable recruiters. So we're in every market with recruiters that work from home across the country. To date, we built a database of 60,000 resumes, one of the largest of any cannabis recruiters out there. We also do white glove service. What that means is we help you with your job description, with the salary requirements for that job in that area. We help you set up phone interviews and video interviews on our lines and Zoom links. We even help you with the offer letter and run a background check at the end to make sure that person won't have any issues working in the industry. We also are the only recruiting company that does our own training. We have a training division that is accredited in Mass and Illinois and covers other states' training requirements as well. We currently have 13 hours of that. And lastly, something that stands us out is we do all this with no upfront cost or exclusivity. Other companies may lock you in, and even if that perfect employee walks in your door, you can't hire them. We don't want that. We want you to have the best employee, even if it's not through HempStaff. So we don't require any exclusivity, and we don't charge you anything until there's a signed offer letter from both you and a candidate.
Not bad. All right. So say you have zero experience and you want to get a job within cannabis. How and where do you start?
Well, like we always tell people, think of what you're currently doing. If you work in a nursery, obviously you can switch to a cultivation center pretty easily. Same thing for retail, customer service, any cash handling business, that translates well to dispensary. College degrees go a long way, but so do cannabis certifications. That's why we started our dispensary training in 2014. Bud tenders had a lot to learn back then. It's gotten better, but there's still a lot more they can learn because they're the ones recommending this medication to patients. So that is definitely something that they look for on the resume as well. But your skills, accounting, inventory, supply chain, just like any other industry, those skills are needed in the cannabis industry.
True. And we all know that cannabis can pay pretty well. What is the most senior level gig you've helped staff?
Last year, we had a large extraction company come to us, and they were doing a private placement, and they wanted a better CEO, one that really, looked good on paper. So they wanted someone with an MBA from an Ivy League school, 20 years experience, Fortune 1000 company. We had to go all the way to London to find one of those. He was actually a Harvard MBA, worked there 22 years for a Fortune 1000 company. We're willing to relocate to Los Angeles. In the end, he got a $240,000 salary and $500,000 in stocks. So not a bad gig.
Not too shabby. I will take that role in a heartbeat. Sorry, Archie. So one thing I'm really curious about is how do you leverage technology to make better employee-employer matches? What's kind of your killer feature?
Sure. As I mentioned, we have 60,000 resumes. I'm a former IT recruiter. That's where I was before I got into cannabis. So I had the contacts to kind of help me with an AI big data project to be able to search these resumes, because some people say marijuana, some people say cannabis, some people, use hemp. Extraction could be CO2, ethanol, and they never even use the word extraction. So it kind of created a thesaurus, if you will, to search through these 60,000 resumes. So if we're searching one term, we get all those other related terms. So it really speeds up the process of which we can search those resumes and get a candidate pool to start contacting as quickly as possible.
All right, I love it. And obviously, big thanks to have you join us today, James. But what is the best way to get in touch with you to learn more?
Our website has tons of information, a lot of blogs, salary chart, hempstaff.com. If you're looking for a job, you can register, upload your resume, and we'll send you newsletters with our job openings. If you're into location, we'll even send you some private job openings that are only sent to people in our database. If you're looking to employ people, you can send us a note right there from our website as well. We also have a couple other websites. Dispensarytraining.com has a list of all of our upcoming training webinars. Cannabisemployment.com is our public job board. You can always email us at info@hempstaff.com as well. And as I mentioned at the beginning, we are doing a special offer for those that need employees listening to this webinar. Mention the Arcview webinar and we'll give you $600 off for our 6th anniversary.
Thank you. I love it. Exclusive perks are always something we appreciate. So thanks again, James. Please head over to hempstaff.com or email James at info@hempstaff.com to take advantage of the special 6th anniversary offer. Just mention the webinar, get $600 off your first placement. Not a bad deal. And for those who don't know, we actually have a little bit of a special treat today. We have BDS Analytics, BDSA. They have Tom Adams, which is the Managing Director, Principal Analyst over at BDSA, here to share a little bit of his own insights about the transition we've been seeing, and of course, speak a little bit on our new joint research report. Thanks.
Report itself, I'm going to give the data compressed version of that, and let me share a screen here to take a look at the deck. And as I said, move quickly through some of the findings. Every time we do this, we find out new things about the industry and some interesting stuff this time as well. So here's the headline numbers on the industry. We're heading towards 21% CAGR over the next couple of years, 34% over the last 6 years. So it looks to us at this point that this is probably the fastest growing consumer product of all time. When we did the 5th edition, it was second to the broadband internet among $5 billion industries that went on to substantial growth. And as we all sit here on the broadband internet, I think that's a positive for the industry to think about what could happen with cannabis in the years ahead. So as people have noted, it's been a terrible time to be a public company in cannabis, especially. This is the crash of 2019 compared to the dot-com crash of 2019. It's eerily similar, starting in March of the years 19 years apart, and featuring about an 80% decline. I think the encouraging news here, this compares cannabis stocks in the New Cannabis Ventures Index to Amazon, which it took 7 years for Amazon to get back to being a $100 stock after this kind of a wipeout. But it's a $2,000 stock today. So not every cannabis company is going to survive or become an Amazon, but some are. And surprisingly, actually, many of the internet stocks did survive. So everybody's taking a look at their strategies. We think it's kind of rewind to 2017 before the bubble started inflating with Constellation's investment, where capital is just not available and it's time to figure out how to make money. So that involves being in the right place at the right time to a large degree. A lot of the ink, of course, goes to the California market, but in looking at where the big legal spenders are, it's an interesting mix of states really at this point, both currently and in our forecasts in 2025. So this is as I said, a mix across the country. It's no longer a Western state phenomenon. Some of the biggest spenders are already being found back east, but some of these top 10 from 2025 are probably surprising to a lot of people. Oklahoma and other states that where there's just a lot of trends coming together to suggest that 2025 there'll be a lot of legal cannabis spending going on all across the country. And that includes actually some of the more mature markets. We had started to suggest in last year's report that we're headed into a maturity phase for markets like Colorado, Oregon, Washington. And then Colorado came in with a surprise this year after dropping to 3% growth only in 2018. Growth accelerated to 13% last year. And a lot of things that are coming together in Colorado to make that happen: aggressive branding strategies, lots of very high quality stores now, massive upgrade in the store mix. in Colorado are also happening elsewhere, or actually just cutting to the chase of a much more modern approach to legal cannabis industries in other markets. So this is really encouraging news that there's growth, that kind of growth resuming in Colorado. And of course, Washington's still growing at a reasonable rate, and Oregon just reporting a record April. So to the point of that record April and what's going on with COVID, the short-term impacts have actually have been pretty positive, frankly. There was a lot of stocking up activity that drove volume right through March. As was talked about earlier, the first quarter was really strong for a lot of the public companies. And we're seeing this kind of most recent results even into May. We're basically just getting back to the typical trends. Friday's the big day, and sort of above trend average performance on some Fridays across this. This is a small sample of our hundreds and hundreds of stores that report to us, the reports in this kind of a weekly trend analysis that we're doing. So as someone also mentioned, that's largely taking the form of stock up phenomenon. So fewer daily transactions, but much bigger transactions on average. And that's causing actually there to be pretty strong growth over previous months and year to year even, depending on the market and the on the ground phenomenon. So that's what's really the heart of this book, though, is that we really get down to that ground level and we go look at every state in detail, 10 Canadian provinces, 40 countries around the world. And we've actually done some interesting work in categorizing the factors, what we call the growth indicator matrices that drive growth or prevent it in the case of some states. But this year we've taken a new take on categorizing the markets so that companies can kind of analyze them based upon their profile versus what's going on in the state. So as you can see here, the big states, of course, are the adult use states, whether they be emerging ones that have just gotten started like California, Massachusetts, Illinois, or the new ones. We think there's a whole bunch of legal cannabis, legal adult use cannabis passage coming up down the road here. We'll talk in a minute about the impact COVID's had on that. But basically, those are where the growth are. But surprisingly, a lot of growth in markets beyond the adult use markets. Here is Massachusetts, sort of the latest and greatest success story. We're now tracking retail sales in Massachusetts as of earlier this year. And things really were in great shape before the shutdown of the adult use sales. We'll see how long that lasts and whether this needs a revision real quick. But at this point, Massachusetts on sale to really see a very successful adult use rollout in contrast to the troubles that California had in 2018. So it's really rewriting our thinking about the adult use transition to see that kind of success in Massachusetts. Illinois, we've just launched coverage in Illinois in the last 2 weeks. That's had a phenomenal adult use start to the things in just the first couple of months this year. We're less bullish probably than some about the upside because Illinois has some of the same problems California does in terms of extremely high tax rates and some of the other things that have really crimped growth in California. But still, we're talking about $1 billion plus quickly in Illinois. But there's also a lot of growth left in medical only markets. It seems like, in fact, and with what's happening in New York and Florida and some of the other ones that are moving towards adult use, that as that talk builds in a state, people start getting medical cards. And so we've seen a huge surge in Florida sales in just the last year, with the bigger one expected this year as they now have authorized flower sales and have loosened up the regulations in a lot of ways. So a lot of positive news amidst all of the bad news for the public companies. So we also cover all the countries around the world, Canada, of course, mostly. The bad news in Canada is pretty well behind us, frankly. It was a phenomenal year, really, with growth getting to more than $1.5 billion in 2019. And it looks like very strong so far this year as well, as it gets well over 2 billion, to the point that it's the second biggest and will continue to be the second biggest cannabis market in the world, next to California, over the next 5-6 years. So we're also looking around the world and finding some interesting stuff. Mexico is the most interesting, especially in the way it got legal, or is going to get legal, and that the Supreme Court stepped in just to say cannabis should be legal, and is forcing the legislature, which was reluctant to move. A lot of delays, a lot of action to stop it from happening, but it probably can't be stopped, is our view. And by 2021, there will be adult use sales getting started in Mexico, and it's a huge country, of course, so it'll quickly become one of the top 2 international markets, along with Germany. which of course got an early start on medical use and a much more broad program than most countries around the world have, but has had a lot of supply problems and a lot of regulations getting in the way of who can grow and who can import into Germany. We expect that all to get worked out, but still with a very limited sales profile in pharmacies only for an $80 million population market, not that huge, but as with the rest of the world, very much a mostly medical story over the next couple of years. So if you get a copy, you'll find a lot of interesting stuff, basically finding that there's, yes, still life in the medical markets, quite a bit of it, that the big growth happens with the 10xing of the available population of customers when you go from, say, 2% of the population that might have cards to the 20% plus that consume cannabis. The COVID impact mixed. We only really tried to account for now with the delays in legalization moves, of which there were many. There were 11 states headed towards votes in November. It now looks like there'll only be 4 that get there, all of which we think will pass, including South Dakota, very interestingly, a very middle America red state about to go adult use. Really, the main point about all of this is that there is no other market that's going to be growing at this kind of rate in the years ahead. Therefore, it's someplace investors should be looking. And even beyond the next 6 years, where we get to $46.5 billion plus, the rolling legalization pace that all this is happening at, state by state, country by country, with some of the biggest states and countries, Texas, Florida, New York, still to come, mean that the long-term high double-digit growth rates for the legal cannabis industry can continue probably for the rest of the foreseeable future, and makes it a great time to be thinking about cannabis investments. So I'll turn it back to headquarters. I think, Jake, you're back up.
I actually think it's Cody.
Oh, sorry. There she is.
Hi, Jake. Okay, I will jump in then. Thank you everyone for being on the call today. Let me give you a few more color commentary from us here at Arcview. If you like any of the stuff that you've heard today, you might want to join back on May 27th. That's next Wednesday, 1 p.m. Pacific time, for Arcview Access Elite. Now that's only for you all if you are members of Arcview. So it might be a little indicator to sign up. The next Arcview Access, which is not the elite version, is the following Wednesday. That's June 3rd, discussing political predictions and how the upcoming elections can impact this industry. I'm excited for that one, see what people think about all these crazy politicians we have today. We also have a few other exciting ways to stay connected with the Arcview community. There should be a webinar survey popping up. I can't see it, but I'm guessing you can. So we'd love to hear your thoughts. Please let us know. Also, near and dear to my heart as a lady, the Women's Investor Network for Arcview members and guests is relaunched. So if you're interested, email us at sales@arcviewgroup.com. Mark your calendars. Stay tuned for details on our next WIN event, which is June 1st. You can visit arcviewaccess.com to get this replay over the next 72 hours, then it's gone. And you can also join the Arcview LinkedIn Lounge, where our community stays connected. Arcview Market Research is what you heard about today. I screenshotted a couple of those graphs, so I'm certainly going to be digging in a little bit more. You got to show me later too, from BDS, how Alaska has that kind of sales numbers. That doesn't make sense to me, so I'll be interested to dive in. It is the #1 cited research in the cannabis industry. That's our 8th edition of the State of Legal Cannabis Markets. So check that out at arcviewaccess.com. And for anything else in the world you want, basically email sales@Arcview Group and they can do all the hard work of getting you connected. I'll leave you with this. There's an interesting statistic that shows that private equity funds, venture capital funds, best vintages are usually those who invest during and right after a crisis. If you do a Google search, you can see this. The article that I found that references it is on PitchBook. So to everybody's point today, we don't think you should invest with a broad brush, but we certainly think you should be looking at where to paint today. Thank you so much for joining us at Arcview.